Good evening. Anything that we discuss today is going to be for educational purposes. I'd like to welcome you all to Digital Trading Floor. It's a platform where we disseminate financial data in real time to provide actionable insights using live streaming technology. So follow along as I navigate the markets by trading in my own account, and hopefully you will learn how I analyze the data in real time to make trading decisions. The purpose for making this video is to analyze Nifty options, open interest data. We'll be analyzing Nifty index on multiple time frames, and we would be framing a view for tomorrow, that is 6th January. Apart from the index, we would be discussing our stock watch list. So let's start with options open interest data. So if we see 7th January expiry options open interest data, you will see that overall highest amount of calls have been written at 14,500 strike and 14,300 strike. And if we see the puts, highest amount of puts have been written at 14,100 strike followed by 14,000 strike. And if you were to see what happened intraday today on the calls, you will see that highest amount of calls were written at 14,500 strike followed by 14,300 strike. And you will see that options call strikes 13,800, 13,900, 14,000, 14,050, and 14,150. The in the money call strikes, they saw their open interest reduce. So it just tells us that in the money call option buyers, they book their profits, while uh, call option writers, they book their losses. And if we see what happened in puts today, you will see that today highest amount of puts were written at 14,100 strike and 14,200 strike. So for the short term, we are in a trading range of 14,100 to 14,500 levels on Nifty index. If we analyze options max pain levels for 7th January weekly expiry contract, you will see that it has shifted up from 14,050 to 14,100 levels. So basically, option max pain data, it just tells us that most of option writers, they are position short the options at 14,100 strike. So if on 7th January, if market was to expire around 14,100 odd levels, then option writers are going to suffer the least amount of losses, theoretically speaking. If we analyze Nifty spot on multiple time frames, you will see that on the monthly time frame, market is under control of buyers above 13,996 levels. And if we see the weekly time frame, market is under control of buyers above 14,104 levels. And if we see the daily time frame today, market was under control of buyers from the open, that is 14,075 levels. So today we had a situation in which we had time frame continued to the upside, that is in at this point of time in price on monthly time frame, weekly time frame, as well as the daily time frame above 14,075, which was today's open. All the multiple time frame participants were aggressive in lifting the offers. So here you can see, so today here you will see that on all the time frames, monthly, weekly, and daily, we had a situation in which the market was under control of buyers. And if we see the daily time frame, yesterday was an outside candle, and today we have broken to the upside of this outside candle. So technically we have made a higher high and a higher low. So from perspective of short term trend, we are currently in an uptrend. And based on the daily time frame, we get the following scenario for tomorrow, 6th January. That is above 14,199 levels. We can potentially trade towards 14,215, 14,256, 14,316 levels. And on the flip side, below 14,116 levels, we can trade towards 14,048 levels and 14,007 level and potentially 13,947 levels. And conservative traders, they can refrain from making any trades in between the neutral price range of 14,199 to 14,116 levels. Now, we are going to be analyzing our stock watch list for tomorrow. The stocks that we have chosen are Britannia, Adani Enterprises, Hind Petro, and Concor. So if we see Britannia, it's an inside candle. So we'll look for breakout in either side of the direction, as inside candles they're formed when there is an equilibrium between both the buyers and the sellers. So tomorrow in Britannia we'll look for buying opportunities only above 3,564 levels, or we'll look for selling opportunity below 3,539.9 levels. And in between the high-low range, we'll not be making any trades in Britannia. Our second stock is Adani Enterprises. Today again it was an inside candle, so we'll look for buying opportunity above 501.5 levels, or we'll look for selling opportunity below 489.5 levels. And in the high-low range, we'll not be making any trades in Adani Enterprises. Our third stock is Hind Petro. Sorry for the background noise. That was my pet dog, Tiger, who's barking probably at a stranger right now. Either ways, our third stock is Hind Petro. Above 223.6 levels, we would be looking for buying opportunities, and below 220.3 levels, we look for selling opportunity in Hind Petro. And our final stock is Concor. So we'll look for buying opportunity above 417 levels, or we'll look for selling opportunity below 408.1 levels. And in between the high-low range, we'll not be making any trades in Concor. Finally, before ending this video, I like to summarize that in the short term, we are trading in a range of 14,500 to 14,100 levels based on the open interest data. And tomorrow, market can trade towards 14,256 levels above 14,199 levels tomorrow. And below 14,116 levels, we can potentially trade towards 14,007 levels. And max pain for this weekly expiry has shifted to 14,100 level, and our stock watch list are all inside candles: Concor, Hind Petro, Adani Enterprises, and Britannia. So we'll look for breakout in either side of today's high-low range to establish a position in inside candle stocks. So inside candles, they are formed when there's an equilibrium between both the buyers and the sellers. And finally, I would like to thank you all for watching this video. Hit the like button, share this video, and subscribe to Digital Trading Flow YouTube channel. And do check out our description section of this video. There you can find links to all our recent blog posts. So once again, do subscribe to our YouTube channel, and thank you once again for watching this video.